What's going on, everyone? My name is Jeff, and in this video I want to talk about Uber stock. Uber IPO'd in May of 2019, guys, and I'm going to tell you what this stock reminds me so much of is Facebook's IPO. And in the same sense, I think it has the same amount of long-term reversal. You know, you've heard these comparisons that Uber is going to be to the ride-sharing industry what Amazon was to the retail industry. And so any kind of early speculation, it's almost hard not to agree with that. Uber is a very dominant company, but it's just not been treated well. You know, in its first 5 to 6 months on the stock market, okay, it sold off massively. The IPO was a disaster, very similar to Facebook, where it traded up really early on in the session and did nothing pretty much but sell off. Following that, you did have opportunity to make some gains if you'd have bought it really early on and sold really early on. But for long-term investors, most of us, we wait for the lockup expiration period to come and go, see all kinds of different volume spikes. Most of the time, we do want to see a good earnings report or two, you know, before we're ready to buy it. However, if you're bottom fishing, I think we have a very unique opportunity here to start a position. Now, I'm not going to say put all your money in here at this type of level, but over the past month, Uber is starting to see some level of reversal, and I have no doubt in my mind the next 4 to 5 years, you're going to see some outstanding earnings coming from Uber. So like I did mention, on the 12th of May, that's when Uber had their IPO, and it basically just traded straight down. And then going into the end of July, actually seeing a pretty nice reversal and trade itself up over $46 to $47 a share. Pretty much been all downhill since. Uber is currently trading at $28.03, guys, and we're going to break it down in this video. We're going to do a little stock analysis, a little bit of fundamental analysis. We're going to see how good of investment Uber is going to be, and then I might even follow this video up with a 5-year price prediction. So do me a favor, make sure to drop a thumbs up on this video. I appreciate all the support, and make sure to subscribe to the channel if you have not done so already. So are we holding puts or are we holding calls? Guys, are we holding both? If you'd like to know how we are playing Uber stock right now, make sure to go check out Trade Alerts Pro. It is the first link in my description box. I upload at least 2 to 3 pieces of content every day, whether it's trade alerts on call or put options, whether I'm buying and selling stocks, and I'm also helping to build students' level of knowledge, teaching them through different lectures. So make sure you go check out Trade Alerts Pro, guys. We'd love to have you with us. All right, let's jog back to November 4th. That's when Uber reported earnings. They had an EPS beat of 16 cents, but they missed on revenue by $150 million. They did show 32.7% year-over-year growth. Again, this was the company that came onto Wall Street, valued around $72 billion. Now their valuation is roughly around $45 billion. I do want to see that revenue number come up a lot. I don't think $3.5 billion revenue is necessarily a bad number, but perhaps the growth does have a snag in it, and they're spending too much money reinvesting back into the company. You know, keep in mind when there's comparison to Amazon, the reason that is fair, Amazon spends every single dollar they make, and that's why they're the 3rd largest company in the world now. So that business model can be very effective. It also can be quite destructive, and people are always going to kind of look at those type of companies like they're fundamentally overvalued. You could also throw Tesla in that same type of business model. Now, guys, I've done a little bit of pre-IPO investing. There's actually a company you can get involved with now that will help you do pre-IPO investing. Most of the time, you're going to run into the same exact problem. Uber's post-initial public offering lockup expired on November 6th. What that means is that the underwriters of the company are now free to sell all of their shares. Let's go over to the chart. I just want to kind of show you the phenomena that usually, most of the time, does happen after a lockup expiration date. What I've got here is the 1-month chart pulled up on Uber. Like I mentioned, November 6th was their lockup expiration date. Okay, so you did see a pretty noticeable sell-off. And then you've seen a period of time for about 7 to 8 days where the stock pretty much sold off day after day. You did see where it did trade up a little bit here, and then the stock hit a low on November 14th. And right here on the 14th, it hit a 52-week low at $25.58. Since that time has seen a pretty decent rebound, actually a little bit better than 10%. But keep in mind, this is a very good rule of thumb. If you're going to invest in an IPO, I always strongly recommend that you wait till the lockup expiration date, because the demand usually does not meet the supply. The market gets flooded with shares and they get traded very, very actively. Most of the time, IPOs are not very good to invest. There is a couple exceptions to that rule, obviously, but in 2019 this has been an IPO happy year. So many companies have come on the market between the end of 2018, the start, and middle of 2019, and this phenomenon is pretty common. Maybe you want to go back 15 years ago when Google IPO'd in 2004, same exact thing happened. You want to go to 2012, talk about when Facebook IPO'd, the exact same type of thing happened. Alibaba in 2014, same thing happened, big sell-off on the lockup expiration date. And Uber is just kind of following suit with those mega cap companies that have come onto the market at a very large valuation, Okay, so like I mentioned a minute ago, when Uber hit the stock market back in May, it was valued around $70 to $75 billion company. Then estimates were running up as high as $80 billion. So think about it like this. If you buy now, you can look at it like it's on sale, because right now the valuation on this company is roughly $50 billion market cap. So I'm sure the next question you're wondering, is Uber a profitable company? Absolutely not, okay? They currently have a negative 63% profit margin and a negative 64% operating margin. Like I said, they have taken a page out of the Amazon playbook, where every single dollar that they make through revenue is reinvested in the company. That explains the explosive growth. We can go over to the income statements. You can go back 4, 5, 6 years in this company. This company has had the explosive growth, but they are not yet profitable. So keep that in mind. There's a lot of very, very successful stocks and companies that weren't profitable. Tesla being one of them, Square being one of them. You know, Advanced Micro Devices was not profitable until 2018. So keep that in mind. A lot of people like to throw that out the window when you're dealing with a growth company. I just do want you to be aware of this. The only time your profitability could cause a big problem for your company is if the company was to go bankrupt. We faced a major economic recession. Now, when you take a quick look at the balance sheet, guys, I'm actually very, very impressed with what both Uber and Lyft have been able to do, okay? So the total cash being around $12.65 billion and their total debt being under $8 billion. So they have far more cash than debt. They have done quite well in that category. You know, that does not mean that they are profitable, but it does mean that they do have their act together financially, okay? So they're not paying out so many bills they can't keep up with them. This is a good business model that allows these companies to grow. They can keep borrowing more. They can also keep a lot of cash anchored, you know, for difficult times. Kind of makes me think they had $3.5 billion of revenue and they have $12.65 billion of total cash. So they did come onto the market, you know, with their financial ducks in a row. I am very impressed by that. And I always find the short percent of float, I always like to take into careful consideration. This is really not going to tell you, is the stock going to go up or is the stock going to go down? This can tell you if you should be expecting a lot of volatility. Going off October 30th, 2019, the short percent of float's only about 6%. I find that to be a very manageable number, especially for an IPO company. And the short percent of shares outstanding is much lower at 3.61%. So you do have my blessing to buy here at these levels. Like I said at the start of the video, just don't go all in. I would not say you have found the perfect bottom and it's going to do nothing but go up. Like I said, manage your expectations, buy into these stocks with the idea you will have to cost average buy down the road. That's part of this, okay? All right, guys, and then lastly, let's just cover a couple of relevant news articles. We all know stocks can be very sensitive to any kind of news. And yesterday on the 20th, Uber jumped 1.5% as the CEO bought another $6.69 million worth of the stock. I find that to be a very, very bullish thing. I'm not even going to attempt to say the name. It's Dara. I'll just call him Dara K. About 250,000 shares this week. He purchased that amount at an average price of $26.75 on Monday, making for a total purchase of under $6.69 million. The purchase brings his beneficial direct ownership to 1,530,969 shares. So they certainly were very aware of that lockup expiration date. And so even the upper management at Uber is taking full advantage of that opportunity. And also, I'm going to briefly share this. It's not really a big deal either way, because this is not what Uber does mostly, but DoorDash actually led the meal delivery market in October. So DoorDash has a 35% of the U.S. meal delivery market last month. Grubhub holds about 30% of the market. Uber Eats has roughly 20% of the share, okay? The overall market grew revenues 40% year over year, and DoorDash sales were up 114% during this period. So like I said, Uber is actually holding about a 20% share, and this is something that they entered a little late in the game. I do feel like Grubhub is going to end up losing this battle to Uber Eats, and I think the number 1 and number 2 players over the course of time is probably going to be DoorDash and Uber Eats. But for my investment dollar, all 3 of these companies, my money is definitely going to be going to Uber. But anyways, guys, that's all I got for the video. Thank you so much for watching. Please go down in the comment section and share your thoughts and opinions on Uber stock. I really would like to hear those. Happy investing and have a great day.